There were significant moves back to a more balanced housing market this week as inventory continues to decline and the market turnover rate is almost at 1.0. I'm Tony with Clarkson Santoro, and this is our real estate update for November 4th. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone who is looking for a house that you will love to call home. The current inventory is 36 homes, down from 44 last week. The average asking price of those homes was $2,018,000, which is up from last week's average of $2,017,000. 7 homes asking an average of $1,758,000 went pending this week. That is less pending homes than last week's number of 9, with a higher average asking price from last week's $1,684,000. A total of 6 homes sold this week with an average sales price of $1,739,000. That average price was down from last week's average price of $1,827,000, and the total number of sold homes was lower than last week's 7. So now that we know how the market performed this past week, we can look at the broader trends that give us the insight into the health of the market and help us understand where it might be heading. But before we do that, if you find this information helpful, you should subscribe to our YouTube channel or follow us on Instagram so you won't miss the next update. You can also share this with a friend so they can be informed on their local market as well. Now on to the market indicators. Inventory fell another 18% this week. Usually, when we see a softening of the overall market, inventory tends to climb up, not decrease. So, even though prices are coming down and we aren't seeing a lot of pending and closing homes, the low inventory is helping to keep the prices from falling off of a cliff. Last week, we scored this indicator at 52, and this week we are raising it to 65. The fact that inventory isn't increasing is helping to create better market turnover numbers. The turnover rate is now at 0.97, which is well within a healthy balance between supply and demand. Even if the financial metrics do not improve, as long as inventory remains low, meaning supply is not outpacing demand, I expect that the turnover rate to remain close to that 1.0 number. Last week we gave this indicator a score of 37, and this week we are upgrading it to 48. The over-under sales price improved slightly this week. We are now seeing homes close at 2.2% below the list price, or just about $41,000 under asking. This is a typical range of closing sales prices in a market that leans slightly in the buyer's favor. Last week we gave this indicator a score of 38, and this week we are slightly raising it to 39. The last statistic that we watch to track the current health of the market is the average sales price. We use a 30-day rolling average to avoid any recency bias, but still provide you with a realistic understanding of where property values currently are. The average dipped slightly this week, but other than a few days last month, the 30-day average sales price has remained in the 1.8 to 1.9 million range for the past several months. Although it is lower than the high of this year, if this average price holds, we are still looking at a very solid landing place for San Ramon home values to be at. Last week we gave this indicator a score of 55, and we will lower it by 1 point this week to 54. Now looking at the predictive indicators, the Invesco Triple Q fund that we watch to help gauge the financial health of the buyers we typically see coming from the Silicon Valley declined a little, dropping $11 this week due to the Federal Reserve rate hike on Wednesday. It has still remained relatively flat over the past month. Next week will probably be more telling about the health of the fund, as the market is likely pausing now to see how the midterm elections play out. Last week we gave this indicator a score of 34, and we are lowering it a little to 33 this week. Finally, we look at interest rates. The Federal Reserve increased rates by 0.75% again on Wednesday. Despite another aggressive move by the Fed, national mortgage rates came down 13 basis points and are now back below the painful 7% mark. While this is good news at the moment, I would expect that interest rates in general are going to continue on an upward trend until the inflation starts to ease up. Last week, we gave this indicator a score of 20, and this week we are bumping it back up to 22. Overall, the market is trending in a seller's favor after spending the last several weeks drifting further and further into a buyer's favor. We are now much closer to a very balanced market where neither a buyer or a seller will feel completely in control of how a transaction goes. But that is a better market for longevity, so it is a welcome move back to normal. Last week, we gave the market a score of 38, and we are raising it up to 43 this week. The only dark clouds on the horizon currently are interest rates. What this means for sellers is that there is less uncertainty about the ability to sell your home for a good price. If inventory remains low, the buyer pool, while still much smaller than earlier in the year, is large compared to the amount of housing inventory that is out there. For buyers, this remains a good time for you to pull the trigger. While interest rates have come down slightly, it is probably not a safe bet to assume they will continue down. If you buy now and rates go up, you'll be happy you jumped in when you had the chance to buy without having to enter a bidding war. If rates do decrease in the near future, you can refinance then, but if you wait until the rates come down, you will likely see the bidding wars start back up. I hope this weekly summary and commentary helped you understand our market and how it's affecting your options. Let me know in the comments down below or contact us directly if you have specific questions about how you can navigate this market to sell or buy a home. And if you find this information helpful, remember to share it with a friend and hit the like button and subscribe so you'll always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.